Bring in show music, please.
Hi, I'm CNBC producer Katie Kramer. Today on Squawk Pod, the fate of Europe after meetings in Alaska and the White House.
Can you be tough enough with a stick or a carrot to get Putin to do what you want him to do?
Key administration official Treasury Secretary Scott Bessent.
Alaska was a show of force by President Trump. It was kind of like inviting your uncontrollable neighbor to your house and showing him your gun case.
Plus, how Secretary Bessent views the government's new, to us, interest in private industry, like a possible 10% stake in Intel.
There are industries that we have to onshore.
Industrial policy or national security.
The last thing we want is a Huawei Belt and Road where Huawei is selling chips to the rest of the world and U.S. technology is excluded.
The big risks to Intel's newest stakeholders.
Yeah, the government.
Go on.
No, the government does not have a great record of knowing how to run a private business.
All that and much more this Tuesday, August 19th. Squawk Pod begins right now.
Stand Becky by in 3, 2, 1. Cue it, please.
Good morning, everybody. Welcome to Squawk Box right here on CNBC. We're live from the NASDAQ market site in Times Square. I'm Becky Quick along with Joe Kernen and Andrew Ross Sorkin.
The Alaska summit reinforced my belief that while difficult, peace is within reach, and I believe that in a very significant step, President Putin agreed that Russia would accept security guarantees for Ukraine, and this is one of the key points that we need to consider, and we're going to be considering that at the table also, like who will do what, essentially. We're going to try and get a three-party meeting, maybe as soon as we can, and I have a feeling you and President Putin are going to work something out. Ultimately, this is a decision that can only be made by President Zelensky and by the people of Ukraine working also together in agreement with President Putin, and I just think that's very good things are going to come of it. So I hope we have a good meeting, and if we can have a good meeting, I'll set up a meeting with President Putin in a certain period of time, not very far from now, a week or 2 weeks. We're going to know whether or not we're going to solve this, or is this horrible fighting going to continue. We'll do our best to get it ended. And I believe you have two willing parties, and usually that's good news, but two willing parties that want to make a deal.
President Trump says he's begun making arrangements for a meeting between Ukraine's President Volodymyr Zelensky and Russian President Vladimir Putin. In a post on Truth Social, Trump said that after Zelensky and Putin meet, then he'd want to have a trilateral meeting with the two men. He's been sort of waffling. I watched a lot of it yesterday. I think, he said, yeah, if you want me to come, I'll come. I'll be there. But I sort of understand that if he goes to the initial meeting and it doesn't work, then it's going to be his fault. So if there is reason for him to go to the second meeting because they get along and maybe they have some common ground. Common ground's a weird term to lose.
Well, you heard the hot mic up moment.
Yeah.
He thinks that they're
exactly
pals or something.
It's I don't know. Watching the whole dynamic. We're going to have Scott Bessent on, and he's the closest thing we can get to someone in the administration. But just to hear about the whole dynamic, we're sitting around with all these European leaders that we just have been sort of using a carrot stick for tariffs. So we're changing our whole, the whole global trade ecosystem. We're changing, and they're not all probably happy about it, but everybody seemed to be getting along pretty well. It was kind of weird for a while.
I was, the body language there, the pictures that they took with some of these ththings, it was like, wow, okay. If they can make progress on this, it'd be amazing. And Scott Bessent was in the room with Putin Friday.
Yeah. The Journal has just a short piece, an op-ed piece, but it just says that, President Trump calls him Emmanuel, and then President Macron calls back to him Mr. President, and that's sort of I guess that's probably the way Trump would like it, but it's just a little, it is a little bit awkward. Yeah. But it's in the United States, and it's, he's convened it and everything else, so he naturally would be thought of as the person like leading the discussion, but it's still President Trump telling Zelensky that the U.S. would help guarantee Ukraine's security in any deal to end the war between his country and Russia, though the extent of that guarantee is unclear. Before talks began, Russia's foreign ministry ruled out the deployment of troops from NATO countries to help secure a peace deal. And Zelensky said that Ukraine offered to buy about $90 billion worth of U.S. weapons it's buying, not getting those. And there's also been some back and forth about exactly whether Putin agreed to a NATO, what would you call it, type, a NATO light, some type of security guarantee. Witkoff, the president's envoy, insists that he did. Others are saying that they find it hard to believe that because that's the whole NATO.
That's been the whole thing. But that's been the whole thing for Putin the whole time. He doesn't want NATO, and
he doesn't want anything close to NATO, probably.
Right. Well, and the reason is, does he want to keep going later? Right. That's the whole question.
Yeah. Yeah. And what's the end game, and can economic consequences, since we're going to talk to Scott Bessent, security and economics are always linked. The Venn diagram for those two things, for the economy and whether you feel safe, and they inform each other on policy. Can you be tough enough with a stick or a carrot to get Putin to do what you want him to do? I don't know if you can get him to do that. He thinks in a 100-year period. He's already said that. I think in 50, 60, 100-year, and mother Russia. So can you?
And the problem is Putin has agreed to things in the past that he has completely violated.
Exactly.
On every one of these. So can you trust him with what he does?
And that's the argument for having a NATO.
I don't think there's any way you can just say, yes, we can trust him.
No, you can't.
Like
he's broken
back to
every
Reagan,
agreement he's ever.
trust but verify, and keep the pressure on.
Right.
There's a way to pressure
you need teeth.
You probably understand it. What do you take him out of the banking system or something? What's that called? The
SWIFT system?
Yeah.
No, the only thing I think the only last pressure is a NATO-like thing. That's the thing.
Right. I don't think economics work.
That's the problem.
We have troops all over the place. Would we really have them in Ukraine? I mean, how long have we had troops in South Korea? Think about that.
Meantime, Softbank investing $2 billion in Intel. This, of course, coming as the Trump administration reportedly considering taking a stake of 10% in that struggling chip maker. Kristina Partsinevelos joins us now with the latest on all of it. Good morning.
Good morning. This is, I would say it's really just a lifeline from the private sector. Softbank is going to pay about $23 a share. Intel tells me just last night it's a, quote, primary issuance of common stock. So that's 87 million new shares, giving Softbank 2% of the company. And shares are up over 5% this morning because it's seen as a major vote of confidence in Intel, far outweighing any stock dilution concerns. The deal also builds Softbank's broader U.S. expansion, including the Stargate data center project with the OpenAI and Oracle, and also a recent deal to buy Foxconn's EV plant in Ohio. Intel, like you said, has also had talks with the Trump administration about a deal that could make the U.S. government its biggest shareholder, a potential 10% stake using CHIPS Act funding. Intel wouldn't comment on this possible government investment, but nonetheless, the rumors have been milling for quite some time. But Intel's foundry unit won't break even until 2027, and that's where the problems come about, and they need external customers to generate billions of dollars in revenue. The company posted a $2.9 billion loss just last quarter. They laid off, or going to lay off, 15% of their workforce this year, and they threatened to halt advanced manufacturing processes without any external customers. As Wedbush notes, cash alone won't solve Intel's problems. The real game changer would be if the administration encourages customers to use Intel's capacity through policy initiatives, for example. So bottom line, Intel needs customers, not just capital, to turn around, guys.
So here's the thing that I can't figure out about all of this. The only way that Intel is going to succeed to some degree is if it finds some genuinely new customers. And I don't know if you remember, but Gina Raimondo was reportedly back, this is in the Biden administration, was reportedly out pressing some of the big tech companies, Amazon, Apple, others, Google, to try to use Intel chips. That was sort of she became a salesman almost for Intel. And the truth was that the chips were never good enough. And so if you were Amazon or Google or Apple, you said, I don't want this. This is not the product that I want to be buying. And so now, and maybe you could argue that this administration and President Trump is either a better salesman or more forceful salesman. What happens when the administration calls Tim Cook up now and says, hey, I need you to buy, 100 million chips from Intel. I know you want to buy them from, Nvidia or XYZ, but this is how you have to do it.
Yeah, there's a difference between the Biden administration and the Trump administration in terms of the overhang for all of these companies. There's no major threat of, anywhere between 25 to 300% tariffs on semiconductors. There's no threat of, hey, we're going to take 15% of your China sales revenue if you don't invest here in the United States. So I think there's a lot more pressure on these companies to invest in Intel. And now you have to see it as more of an R&D investment. So we're going to invest in Intel. We know that their most advanced chip manufacturing process is still not up to par, but hopefully it will help us in the long run when we need to build on American soil, and there's more of this sovereign push, to create here.
I guess
but you are right.
Where I'm going with the question
problem.
is, are they going to be forced to buy products they otherwise don't want to buy? It's one thing to force them to invest in a company that they don't want to invest in. That's one thing. To actually buy product that you don't want to buy because you don't think it's good enough actually then has ramifications on the customer.
I don't think it would be a force to buy, because then you would have had Softbank say, we're going to use Intel right now to build out ARM's future chips, right? Because ARM is Softbank's a major investor in ARM. ARM is said to be building their own individual CPU chips that would eventually compete against AMD and Intel. So I think it's more about investments at this point. I don't think that these companies are being pushed to actually use all of the products from Intel just yet.
Well,
but
Andrew,
they need to do something soon, because the foundry business is going to flounder.
Andrew, you're not giving government enough credit, I don't think. If the government invests and then it becomes involved with the running of the business, they could improve the quality of the chips. Imagine an Amtrak and what they've been able to accomplish there, or the air traffic controllers system. Yeah, the government.
Go on.
No, the government does not have a great record of knowing how to run a private business. But the other thing, and it's pointed out, as I said in the journal, it helps when companies that are really bad are allowed to fail. And Intel, the reason they're laying off people and not using the chip money they got, there's no demand for the. Why would
this goes to the demand issue.
Right. Why would they build more manufacturing facilities when no one is buying their chips?
I believe the next part of the story is the jawboning, if not something worse,
what if it was a carrot?
Companies to acquire to use the chips.
A carrot? What if it was a carrot instead of a stick? In other words, some type of
we'll pay you to use this crap.
Put this piece of crap in your stuff, and we'll pay you instead of no. That.
But by the way, then you infect the entire ecosystem.
Right.
You infect the entire technology business.
You're really getting me agitated here.
I go back and forth because I agree with everything you guys are saying on these points. You get back to this idea of we don't manufacture any chips here. We are completely reliant on Taiwan. If anything happens to Taiwan, we are hosed.
It would be nice if SoftBank would keep putting in more money. Like
somebody else would pay for it.
Right.
Well, and then there's a separate issue, which is you have SoftBank putting money in right now.
Yeah.
Part of their gamble is that the taxpayer in America is effectively going to subsidize their investment.
Because of the 10%.
Correct.
Right.
So how should we feel about that?
It opens up a lot of.
Although when the government did put money into the auto manufacturers during the financial crisis, it worked out very well. When you put the money in, you took it as a first investor who gets paid before anybody else. You got a preferred dividend on it. The government made money on all of those deals that they did during the financial crisis.
Do we have a great auto sector now?
No, but we made money. The point is the U.S. taxpayer did not lose money on those deals.
But it did, I don't want to call it mediocre, but we still think
and the government was heavily involved with all the
subsidized sort of mediocrity.
When things were falling.
If things went south again,
as you know, I always thought we needed to rescue the banks. I wanted to rescue the automakers too. So may have called on me. However,
we did well.
It also created a cultural backlash that I would argue to some degree has lasted even to this
Wall
day
Street,
in a sort of massive way. And so I just wonder, does this
and it also created the problem where investors think you don't have risk, and that has lasted to this day as well, that the government's always going to bail you out.
Yeah, you know what, you probably have to say it was good that the automaker, because the quality's improved. We need that industry in the United States. It may not be, you may still say Japanese or Korean automakers make The quality's improved. I like my American
By the way,
and I'm glad we have that industry.
I would probably oddly have more time to pull a Fannie Mae, Freddie Mac situation on this whole game.
Yeah.
Just take over the whole thing. Just take it.
Right.
Just take. Who's made? You want to know where the real money's been made for taxpayers?
Right.
That's where
Fannie
the real
and
money's
Freddie,
been
right.
made.
Fannie and Freddie.
And there's massive pressure right now for the government to get out of those businesses
Right.
from the investors who want to make the
Correct.
money on it.
Correct. And so once you get into this quasi.
But then the question becomes, if you do that, will
quasi-
you be able to get loans for home mortgages? Because they subsidize such a huge part of it.
That's a whole different ball of wax. Nvidia reportedly working on a new chip for China that's more powerful than the H20 chip it's already allowed to sell there. Reuters reporting that Nvidia's new chip is based on its latest Blackwell architecture. Its design will likely deliver half the computing power contained in the company's more sophisticated B300 card. Now, sources telling Reuters the company wants to deliver samples to China for testing as early as next month. I imagine they have to send samples to the White House as well if they're going to be sending this stuff that direction.
As they should in a state-run. We're going to talk to Scott Bessent about this. He should have some. There are one-off situations. That's the problem I have. Like certain metals that we need, certain pharmaceutical constituents that we need. How do you do that? How do you make sure that next time that there's a problem, we have access to that? Chips. Is there a place for industrial policy?
We look at how quickly we get shut down by the rare earth metals.
That's what I mean.
China,
yeah.
right.
Tease will be next.
Coming up on Squawk Pod, have you heard enough about industrial policy yet? Nope, not us. We'll get into it with the Treasury Secretary. Scott Bessent joins us, fresh off President Trump's meeting with Vladimir Putin and the following European summit at the White House. Are we onshoring the all-important chips industry?
The single point of failure for the global economy is that 99% of the advanced chips in the world are made in Taiwan. And for national security, we have to stop that single point of failure.
This is Squawk Pod.
Stand Andrew by in 5 seconds. 4, 3, 2, 1. Up and Andrew. Cue. Here's Mike.
You're watching Squawk Box on CNBC. I'm Andrew Sorkin along with Joe Kernen and Becky Quick. Among today's top stories, Softbank investing $2 billion in Intel. This is it tries to expand into the U.S. chip market, and the move coming as reports say the Trump administration considering taking a 10% stake in the struggling chip maker. That's going to be one of the topics we're going to discuss and tackle with Treasury Secretary Scott Bessent.
One more thing.
Yes, sir.
Our friend Paul Hickey.
Okay.
He spoke Capitol.
Yeah, what does he say?
The federal government bailed everybody out with no strings attached during COVID.
This is true.
Why should the airlines have been treated any differently? You know what the total, it's hard to estimate all in what the bailout cost, adding up Trump and the CARES Act, and you know what the estimate is?
What?
I'm going $5 trillion.
It's exactly what the estimate is, $4.5 to $5.2 trillion. So?
Thank you.
No, well, you're welcome. But so the airlines, why do you have to pick on them so much?
So,
Everybody got bailed. Everybody got
bailed.
bailed. It wasn't their fault.
It wasn't.
No.
Did you get a bailout? I didn't get a bailout.
A lot of people did.
A lot of people did.
You could have for your varied and sundry businesses. You didn't get any PPI stuff?
No.
Was it PPI? What were those things called? PP something.
Well,
remember all those?
well, there's PPE, which you did.
the
PPE,
payroll.
which is protective.
Yeah, all those loans. All
PPP?
but implied
Yeah,
and
PPP.
guaranteed.
Is it PPP?
Yeah,
I think so.
Yeah, it's 3 Ps. Joining us now, Treasury Secretary Scott Bessent. You never know what you're going to hear before you come on, Mr. Treasury Secretary. It's always a pleasure to have you on. Good morning.
Morning, Joe.
We have talked in the past about whether you wear different hats, and you have always said, I wear the Treasury Secretary hat. But can we talk about the meeting yesterday with the European leaders and with President Zelensky? We haven't talked to an administration official yet. Is the reporting correct that there will likely be a bilateral meeting and then perhaps one that includes President Trump? Is that where things stand right now?
Joe, let's go all the way back to Friday because I want to set the record straight on what went on in Alaska. Alaska was a show of force by President Trump. He invited President Putin to land that the Russians used to own. He displayed a huge amount of military hardware and then did a flyover. It was kind of like inviting your uncontrollable neighbor to your house and showing him your gun case. So then the President Zelensky, we had a very good meeting with him and his team in the Oval for about an hour and a half. And then we met with the European leaders. It was an incredible group to have in the White House, all led by President Trump. And yes, the culmination of that was a call with President Putin. And my strong belief is that there will be a bilateral meeting between President Putin and President Zelensky. And that's the only way to end this conflict, is to get the two sides talking.
There's such a large intersection between security and economics. I would think that any thing that we arrive at, or that Ukraine arrives at with President Putin, to get him to I don't know, for lack of a better term, to behave or to live up to all of the promises that are made, what type of economic considerations would be involved there, whether it's carrots or sticks? Because we've talked about he's made promises in the past that he hasn't lived up to, and there's a feeling that he's going to have to be induced to live up to whatever pieces is arrived at.
Well, I think the sense is that both sides are ready for this terrible conflict to end. And one of the ways to make President Putin want it to end is on the economic side. The Russian economy has 20% plus inflation. Right now, it is a war economy. I think more than 25% of the GDP is coming from the military buildup. So, you know, it's a very imbalanced economy. They're the frozen Russian assets. The runoff from those is now being used to finance the war. So, you know, there are a lot of moving pieces here, Joe. And then there's the Russian oil. We have planned to up the tariffs on India. These are secondary tariffs for buying the sanctioned Russian oil.
It was interesting watching just the dynamic with the president and the different leaders from Europe that were there. We had just finished a lot of negotiations on tariffs and trade, and everybody seemed to be getting along. It was a little bit surreal, was it not?
Joe, it was a optimistic, great day. Everybody's looking forward. The tariff discussions behind us, and that was very successful. Well, with Europe, and that's a very successful negotiation that President Trump completed in Scotland a few weeks ago, and now we can look forward to getting this terrible conflict solved.
Treasury Secretary Bessent, just in terms of already being done with those deals, I mean, there's still things that are popping up. The Financial Times had a story this week that pointed to the Digital Services Act and the Europeans really wanting to preserve the Digital Services Act and still be able to go after with that. And those are some of the non-tariff barriers that you all had been trying to negotiate and get rid of. It sounds like that is still there. Do you think this cooperation, this potential cooperation when it comes to Ukraine and Russia will end up affecting some of those economic talks that you've been having and will continue to have, I'm certain, for years to come?
Well, Becky, what you're talking about is the digital services tax, the DST, which is an unfair tax where some, not all, European countries tax our great internet companies. And, you know, it's unfair because it's very specific to our companies. But again, Europe very often has a collective action problem. The tariff negotiations were with the EU. You know, I can name a few. I believe it's Italy, France, Spain have the DST, Germany, Poland, others do not. So that's more at the national level than at the EU level, and the tariff negotiations were at the EU level.
But will the Digital Services Act be something that this administration pursues actively? I guess is question one. And question two, because of this cooperation that you see on areas like defense and national security, will that bleed into any of the conversations that are taking place on the economic side? I mean, I think it's key that you, as the Treasury Secretary, are involved in all of these conversations.
Yeah, look, I think that the DST is very different than security guarantees for Ukraine. Everyone wants this conflict to stop, and we're not going to let the DST stand in between that. But we are pushing back. We're pushing back on countries around the world. And the problem with the European countries doing it is once the European countries do it, then they set a global standard, and countries like India, Turkey, Brazil think it's okay to do it.
Mr. Secretary, we would never have enough time, obviously, and I just heard how much time we have left. So in terms of, I mean, there's a letter being sent by some Democratic senators about security concerns with the H-20 chip. There's talk about export taxes de facto with the Nvidia and the AMD 15% or whatever sharing revenue, taking a stake in Intel. For lack of a better term, industrial policy, which is anathema typically to Republicans. Would you put any of these things that we're doing right now under that umbrella of industrial policy, which rarely, according to most people, works out?
Well, I would put I'd put them under security policy. And look, what we discovered, the only good thing about COVID was it was a beta test for what being cut off on the key industries looks like. So whether it's chips, pharma, steel, several other rare earths, many other industries, we've got to become self-sufficient. And this administration is determined to do that. I think there is a group of us in the administration that if we leave office in January 29 and have not done that, we will have considered that we've failed.
But that doesn't explain the Nvidia and AMD. I don't know what you'd call that. It almost, some people have referred to it almost as a shakedown. You give us, some revenue sharing, and you can sell these chips that formerly there was some concern about whether China should have access to these advanced chips. And now it seems like if there's money involved, suddenly it's okay.
Well, Joe, again, on the H20s, I think H20s are now pretty far down the Nvidia stack. So
right, it could be much more advanced. Yeah.
It's not a national security risk. And what we would like, and what the industry has made a very strong case for, is for China, for the rest of the world, including the global South, to develop the U.S. standard as the global standard. I remember when Japan led the world in cell phone technology, and it didn't become a global standard. And for a long time, the Japanese technology got very isolated. The last thing we want is a Huawei Belt and Road where Huawei is selling chips to the rest of the world and the U.S. technology is excluded.
Mr. Secretary, I have a couple of questions. One is there's a new report out. It relates to Nvidia about a new chip they're trying to build called the B30A, which apparently is more sophisticated than the H20, which they want to sell to China. Have they come to you about that chip?
That would be, Andrew, that'd be through Commerce. I haven't seen that yet. I was watching you earlier this morning, so I'm sure we'll be discussing it, and it will require a license to do that.
Right. Well, then weigh in on this, since you did, it sounds like you heard maybe some of the discussion we were having earlier, and it relates to Intel and the potential 10% stake that the U.S. Might take in that company. And what steps you think either the White House or the administration might otherwise take to try to persuade or aggressively sell Intel chips to U.S. companies? Because one of the biggest issues about Intel thus far has been that they're not selling as many chips as they should. And the Biden administration actually tried to put some pressure on big tech companies to buy these chips. And a lot of those companies said, we don't think the chips are good enough.
And the last thing we're going to do is take a stake and then try to drum up business. The stake would be a conversion of the grants and maybe increase the investment into Intel to help stabilize the company for chip production here in the U.S. There's no talk of trying to force companies to buy from Intel.
But no concern that, if you prop up a company that deserves not to make it, that it's just another example of almost too big to fail. Is Intel in the past, the government hasn't been great at picking winners and losers. But you think because of the foundry that Intel has, it's that important that the government actually helps to keep that viable?
Joe, they're industries that we have to onshore. I think you and I are the only ones in this conversation old enough to remember the Arab oil embargo in the 70s and gas lines. And I would say that the single point of failure for the global economy is that 99% of the advanced chips in the world are made in Taiwan. And for national security, we have to stop that single point of failure.
Mr. Secretary, have you had any, just changing, once again, like I said, we try to get as much as we can in. Have you interviewed anyone for Jay Powell's replacement in recent days? Can you give us any light on where that stands? And after the PPI numbers we had last week, do you still think that this is the time for a 50 basis point cut or at least 25 at the next meeting?
Well, Joe, a lot of things there, Joe, so let's dissect that.
Okay.
In terms of the interview process, we've announced 11 very strong candidates. I'm going to be meeting with them probably right before, right after Labor Day, and to start bringing down the list to present to President Trump. And it's an incredible group. It's people who are at the Fed now, have been at the Fed and private sector. So I'm looking forward to meeting all of them with a very open mind. And then on PPI, first of all, since President Trump came into office, there were 5 very tame PPI numbers. And a big component of this month's PPI number was investment services, which just means the market went up a lot.
Right, in terms of, since a lot of it is 2 and 20 or whatever, I guess maybe that
well,
makes sense.
even just 1%, if the portfolio is up 10%, then it's up.
But
Mr. Secretary, you started at the beginning describing President Putin as your uncontrollable neighbor. You kind of brought over and showed your gun case to. I know part of what the administration has done has tried to make it tougher for Russia to be able to sell its oil. It cracked down pretty tough on India, which is importing a lot of Russian oil, but not so much when it comes to China. Is China in the wrong for importing so much Russian oil as well? I think they import just as much as India does.
Well, let's go back and look at the history, though, Becky. And look, China importing it is suboptimal. But if you go back and look pre-22, pre-invasion, 13% of China's oil was already coming from Russia. Now it's 16. So China has a diversified input of their oil. If you go back and look now, I believe India had less than 1% of their oil, 1%, and now I believe it's up to 42. So
wow.
India is just profiteering, or they are just profiteering. They are reselling. They've made $16 billion in excess profits, some of the richest families in India. So this is a completely different thing. Like this India, what I would call the Indian arbitrage, buying cheap Russian oil, reselling it as product, has just sprung up during the war, which is unacceptable.
Mr. Secretary, just to touch on another topic that I think we have talked about, at least I think maybe we talked about with actually the president, but I'm curious where you land and just how it would be effectuated, this idea of using some of the tariff money to effectively create a dividend for American citizens. A, are you an advocate for that relative to using that money to pay down the debt? And B, if you are, how would it work in practice?
So, Andrew, I think President Trump has talked about that, but he and I haven't, and I think at a point we're going to be able to do it. As you would have seen, U.S. ratings were affirmed last night because of the tariff income, but President Trump and I are laser focused on paying down the debt. So I had been saying that tariff revenue could be $300 billion this year. I'm going to have to revise that up substantially. So I think that we're going to bring down the deficit to GDP. We'll start paying down debt. And then at a point that can be used as an offset to the American people.
You said you might have to revise. Is it up? How high?
I'm not prepared to give you the number now, but it could be substantial.
I know you have an 8 a.m. I was going to ask you. I can't help myself. I asked you about inflation. We had someone on the other day that looked at the revised employment numbers and said you could almost make the case that there might have been a lull, but it's starting to turn back up. Is that what we want, or does that make it harder for the Fed to cut? What do we? I guess we want full employment with low inflation so that the Fed can cut. I can answer for you, I guess.
Well, that's a good answer, Joe. So I think we can go back to. I think that we could either go back to the 90s where we had good low inflationary growth, or back to President Trump's first term. But I think the real problem here is we're seeing some distributional aspects to the higher rates, as your earlier guest said, especially in housing and in for lower income households with high credit card debt. So we're seeing this big CapEx boom. Part of it's AI, part of it's the tax bill. And so CapEx is doing well, but households, home building is struggling. And you were asking me about interviewing Fed candidates, and there's the ability. Everyone has the ability to look at the current data, but let's just think about if we keep constraining home building, then what kind of inflation does that create 1 or 2 years out? So a cut here could facilitate a boom or a pickup in home building, which will keep prices down 1-2 years down the road.
All right. Once again, I know we went long. Thank you. Apologize to people that schedule these things for you, Mr. Treasury Secretary. Thanks for all your time. Appreciate it.
Good to see you.
Don't go anywhere. There's still more Squawk Pod coming up next. The business of actively managed ETFs just got a little more crowded.
Wow.
That is weird.
That is weird.
Part of what's happened here is you couldn't do this before.
You're listening to Squawk Pod from CNBC with Joe Kernen, Becky Quick, and Andrew Ross Sorkin.
Stand by, Joe. In 3, 2, 1, his mic, cue.
Ron Barrett is working on launching 5 actively managed ETFs. An SEC filing details focuses ranging from small and mid-cap companies to financial stocks to tech. Separately, filings show investment giant Vanguard is planning to debut its first actively managed U.S. stock ETFs this year. Wow.
That is weird.
That
is such a turn from what John Bogle came up with and what he designed this entire company to be.
Never trying to beat the market. Now they
because
are.
you can't do it, and it's not worth the fees, and people get ripped off for it.
It's different this time. They got the perfect person to run it, maybe. Vanguard plans to roll out ETF versions of 3 of its existing mutual funds. The company says the strategies will focus on growth stocks, value stocks, and dividend growth.
But this is a change in the law. So part of what's happened here is you couldn't do this before.
With an ETF.
Yes, all of this lived within the wrapper of a mutual fund. You weren't allowed to be an ETF. Now they've effectively allowed the creation of these ETFs. The other piece of this is they all carry higher fees.
Right.
Why do you want to be in the actively managed business? Because of the higher fee structure. Because you can claim
that we're doing
something that's unique and different. That's what
Jack Bogle preached for forever. And what he did at Vanguard and the reason it came about. It is way different.
And that is the pod for today. Thank you for tuning in. You can catch us every day if you follow Squawk Pod wherever you're listening now. If you want even more Squawk, who doesn't? Check out our full 3-hour TV show, Squawk Box, hosted by Joe, Becky, and Andrew every weekday morning on CNBC, starting at 6 Eastern. That's it. We'll meet you right back here tomorrow. Have a great day.
We are clear. Thanks, guys.